All right, so welcome into the first Mitten podcast. Still working on a name. I'm Mac Horvath. That's Chris Dominic. And we want to try to come up with something monthly to share with our clients, with our real estate partners, and anybody really in the mortgage industry. Just some knowledge that we have or that we've seen over the past month or so. Chris, you want to introduce what Mitten Mortgage is about, since you are the co-founder, or not co-founder, but you are the founder and the owner of it?
Yeah, so Mitten Mortgage Lending, we've been a local brokerage. We've been open for 6 years now. We're right here in downtown Wyandotte on Biddle. We're a broker again. So as a broker, we're signed up with multiple different lenders. So in most cases, when people are going to shop for a mortgage, they're going straight to their bank. They're going straight to a direct lender who's only going to have very specific products from that lender. Us as a broker, we're signed up with over 10 different lenders now. So if someone comes to us, they're trying to get approved, they need help with something, we've got 10 different places that we can take that loan, all with different products, all with different guidelines. So it's really nice as a brokerage to be able to shop that out. Also, on top of that, being a broker means we're always going to have better pricing than a lot of other places. As far as pricing goes, we're getting wholesale pricing. So think of it like when you go to Costco or you go to Sam's Club, we're doing this in bulk. So there's going to be a little discount on the pricing there. And on top of that too, to add, we are not Mitten Mortgage Lending. This is special to Mitten Mortgage Lending, but we don't have any junk fees. So we're not hammering people for garbage, for junk fees, things that they don't need to pay. Anytime you buy a home or you refinance using Mitten Mortgage Lending, you are not going to pay anything that you don't need to pay. You're only going to pay the fees that you have to pay when you're buying a house. No extra junk fees, like nothing on top of that, nothing like that.
Yeah, well, that's we get the term a lot. We use it a lot. Brokers are better. And that starts not only with pricing, like Chris is talking about, but service. Service is a big thing to us. The client experience is important to us. Not only do we want speed and efficiency, but we want to make sure the client knows what's going on at all phases throughout the process. They know who to call if they have an answer or if they have a question about something. And normally it's going to be the banker that's working on their file or our processor who does a great job. And that's led to a lot of 5-star reviews for us.
Yeah, absolutely. And I always tell people, don't take my word for it. Don't take Mac's word for it. Go on Google, go on Facebook, read our reviews. That's the best thing we could possibly tell anyone to do if they're considering or trying to think about where to get a mortgage. Go check out our reviews. Service is of the utmost importance to us. We always say, like, yeah, we're a mortgage company. We're not really a mortgage company. We're a customer service company. We just happen to do mortgages, I feel. So at the end of the day, client satisfaction and everyone being happy is number one. I always say, like, this is a huge purchase. A lot of people are spending a couple $100,000 on a house. We're not ordering a pizza here. So like if you do have questions and there's things that you need answers to or want answers, we're going to make sure you get those answers. Client service is the most important thing probably.
Yeah, and I think marketing-wise, this probably right now is the most that we've done. So we've worked strictly off of referrals. So if it wasn't off of those referrals, the business wouldn't be where it's at in 6 years. So I think that speaks to itself that we're able to do that basically all on referrals.
Yeah. No, Mac hit the nail on the head. That's a super important thing to mention. We are 100% referral based. We work solely off referrals. We are not dialing leads. We are not a call center. We are not buying leads or doing any of that. We are only here if we continue to do a good job and people trust us with their referrals. So when you send someone to us, they're gonna get the best service possible because we depend on it.
Yeah. And that leads kind of into a topic that we're going to try to hit on, and we're going to try to highlight a program each time we do one of these podcasts. So again, like Chris mentioned, we work with 9 to 10 different banks at any given time. Each one of those banks has different programs, and we see which programs are working for people, which aren't as popular. Some of them are really specific to certain people, but one that we've used a lot recently has been the 1% down conventional loan. That has been huge for a lot of buyers, whether it's first-time home buyers or not. 1% down, making it a conventional loan. They get the grant for their down payment. It's totally forgiven from the moment they close. They could sell the next day. They don't owe anybody anything. So that 1% down is a big thing that we've been using, and I know Chris has used it a lot too.
Yeah, so 1% down is one of the better products that I've seen come out since I started mortgages in 2012. This is this is awesome. I like to call it the Mishta killer. It is. If anybody's out there, they're shopping for a home. I know Mishta is very popular, especially in this area. It's a very popular loan program. And not to say it's not good. There are people that need Mishta, and there are people that ultimately do use a Mishta loan. But at the end of the day, if you can get a loan without using Mishta, I think you should. 1% down is as good as it gets. Like Max said, the lender is giving 2% as a grant up to $4,000. So if someone's buying a house for $200,000 or less, they are truly going to be able to come to closing and put as little as 1% down. Now, the biggest part of it, and the reason that I say it's so much better than Mishta, and honestly so much better than a lot of the other down payment assistance or any other programs out there, is, like Matt kind of highlighted, this money that they give you, this grant, is completely forgivable day one. If you close on this house and today and tomorrow, for whatever reason, you decide to sell it, it's probably not the best financial decision you could make. But if you close on this house today and you sell this house tomorrow, you do not owe that grant money back. You do not owe it to anybody.
And a lot of people too are going to be, if you're purchasing right now and you're using these, you're going to be refinancing soon. Like, the rates are super high. So if you're going to be refinancing within 6 to 12 months, that money that you are getting as a grant from Mishta, that's going to be owed back.
Absolutely. So that's the I would say the biggest issue with a lot of these other down payment programs or these down payment assistance or these grant programs is that you do owe that back. You buy a house now, it's no secret that rates are a little elevated and that rates are a little bit high right now. The whole industry knows that rates are coming down. Whether that's going to be in 6 months or a year, we're not sure. But the world knows that rates are coming back down. When rates go back down, everyone's going to want to refinance, and why wouldn't they? There's monthly savings there. They're putting money right back in their pocket. If you get into a house, though, and you have no equity because you owe that money back to somebody else, you aren't going to be able to refinance. So now the perceived upfront benefit of getting this money and getting into this house is really only about right now. And when we're buying a house, the decision shouldn't be made based on right now. A house is it's an investment. It's a large investment, and it's a long-term investment. There's no reason at all to get yourself stuck in something that you can't get out of. We know rates are high right now, which means payments are high. So when those rates come down and people want to lower their payment, the last thing we want is for someone to be stuck in a loan because they don't have any equity in their home. And we need equity to refinance. We don't need a ton of equity, but you need equity to refinance. If you can't refinance and you're stuck at 7 or 8% and everyone around you is refinancing and saving $100, $200, $300 a month, whatever the case may be on their mortgage, and you're stuck with your payment because we didn't maybe take an extra 30 days or an extra 60 days or whatever it may be to save up and just put that little bit more down, or just put this 1% down instead, you might be stuck in a bad situation for a long time.
Yeah, and normally those loans are also going to come with higher rates and higher fees too. And that's kind of the one thing that we talked about, is that even though you're getting this grant, you get hit with a lot more fees than you would have with a normal loan, especially, again, looking back at the 1% loan like we talked about. Other thing that we haven't even mentioned, the 1% loan we talked about is conventional. It's not an FHA loan, so we can still close it with the speed and efficiency that we normally do things.
Piggybacking on what Mac's talking about there, the 1% down, you're probably going to get less grant money than you do when you get a Mishta, but it's not uncommon for loans to come across my desk where we're giving you less grant money than you were getting with Mishta, but you owe less cash to close with us than you do even if you did a Mishta. So even though they're giving you a larger sum of money, you're also paying more junk fees, you're paying for more stuff that you don't need to, your rate's gonna be inflated because of that large down payment assistance that you're getting, where there's none of that. This is a regular conventional loan, you're getting regular conventional rates, and the added bonus when you use Mitten mortgage lending is you're not paying those junk fees. So it's not uncommon that even though you're getting less grant money than you get with Mishta, you are still coming with less cash to close than you would if you were getting a Mishta loan.
Yeah, and so again, to highlight the requirements there for the conventional 1% down, so the loan is going to look like it's a 90% loan to value, 97% loan to value, because they are going to be covering a grant for 2% of that down payment up to $4,000. The AMI limits, which the area median income, that's for, and these numbers are for Wayne, Oakland, and Macomb County. So if you go down to Monroe, it might be a little bit different, but it's about $76,000. So the buyer can't be making more than $76,000 in a year. But we have the ability to chop that income up. So let's say, for instance, you had a buyer that they have a salary of $70,000, but they earn $30,000 in bonus or commission. If they can qualify for the loan using just that base salary, we can use just that base salary. Same thing if it's a husband and wife. If one of them can qualify on their own, we can just use one as opposed to both of them on there. So we can have some manipulation that we can try to do in certain situations with people's income to get under that $76,000 threshold so they then do qualify for this loan. Again, also, it's not just for first-time home buyers, although we have a lot of first-time home buyers that use it. It is for everybody that's out there. Again, if they can get qualified, they still have to get qualified for the loan. They still got to be approved for the loan. So, we still want credit to at least be over 640 to have a shot. But obviously it helps if the credit's 700 or higher. But I've definitely used 1% down for people that had 680 and 670 credit before.
Yeah, definitely. All right, cool. So I think moving on, the next thing that we want to talk about, every month we just want to highlight one of our loans, just tell a good story about something that's happened or a really positive loan experience that we've had. So we're going to call it the loan of the month, and Mac actually has a phenomenal loan to discuss for loan of the month. I'm going to let him tell you guys a little bit about it, but it does involve a MSHDA that fell out and didn't happen. It fell out during process, but I'm not going to go any more into it. I'll let Matt give us the details here.
So yeah, we had a realtor partner of ours, someone that we talk to, work with, play a lot of golf with, call and say, hey, I have this client. He was actually kind of just working, I think, as a transaction coordinator in it. So client was trying to buy his grandma's house. So client's trying to buy his grandma's house, everything's set up. He was using a MSHDA loan, and for whatever reason, they thought they were a week away from closing, and the loan completely got denied. So, and we never really got the details of whether they were making too much income or whatever it might have been. Either way, they were signed up for a MSHDA loan gets denied, and they were told not only is the loan denied, they can't purchase the house now. So he said, can you take a look at this? Is there anything you guys can do? After diving into the client's information, the loan was actually pretty standard. We got him in a 1% down conventional loan, and it was clear to close within 12 days. So he went from basically a 2-week separation from we think we're closing to no, you're now denied and you can't purchase this home to 14, 16 days later, he's then closing, getting the keys. And it's kind of something we've talked about too. Like, I feel that people get pushed into MSHDA that it's not even necessary for them. We've heard stories of people being at closing, again, whether it's some partners of ours when they're on the listing side and they've seen the cash to close number be over $10,000, yet they're using MSHDA, or whether it's $15,000 they're using. So it's been kind of odd with that, but that was a situation for us, which was, again, super helpful. It makes you feel good. You enjoy doing your job when you get a client that thinks they're basically heard the worst news that they can't purchase this home, and then you get the opportunity to grab the bull by the horns and go make it happen for them.
Yeah, and I don't even think we had to extend closing or change the contract or anything. You
No.
were able to squeeze it in basically you got the loan, let's say, midway through the contract period, and we were there. We were there
Yeah.
at the closing table.
Yeah. It worked super fast, super efficiently, which is, again, a lot of the things that we do here. But yeah, it was really a cool situation, like we said, to be able to help that client out and put them in that spot where they can become a homeowner.
Yeah.
So then, last thing we want to get to too is kind of a market update, or also an update on what's new at Mitten. So I know that Chris will hit the market first, but then we do have an update for some of our partners out there, or people that want to work with us or just get some information from us or meet or whatever. But first, Chris has got some market update info.
Yeah, so first we'll talk about the market a little bit. I guess we'll try to ease our way into this without making it too complicated. We'll get this as simple as we can. So the 10-year Treasury bond is a great indicator of interest rates. It's a really good way to kind of measure, see what's going on with rates. Generally speaking, this is not all the time, but generally speaking, if that 10-year is on the rise, rates are probably on the rise. If that 10-year is going down, rates are probably going down. There's a lot of other factors that go into it, but that's kind of the simplest plug-in that I like to start with when it comes to interest rates. So starting off, the 10-year Treasury right now I think it closed today right around 4.23. So to put that in perspective, that doesn't mean rates are 4.23 or anything like that. It's a completely separate indicator. But the 10-year closed at 4.23. To put it in perspective for everyone, when rates were rock bottom, middle of COVID, August of 2020.
The greatest time ever.
Yeah.
Besides
I don't know if you could call COVID the greatest time ever, but yes, in terms of interest rates, the greatest time ever.
Yeah.
And so to put it in perspective, right now, February of 23, we're sitting at 10-year of 4.23.
24, February 24.
I'm sorry,
yeah.
February of 24, we're sitting at a 4.23. During COVID in August of 2020, that same 10-year was at 0.53. So it's significantly inflated and significantly up from where we were. Now, a couple weeks ago, early February, that same 10-year that's now at 4.23 was at 3.843. So it has come up a little bit. Early February we saw rates dip a little bit. We thought it was here. We thought the time was now. We thought rates were coming down. We thought everyone was going to be ready to refi, and it kind of flipped around on us and it climbed right back up. Now, it's a good indicator. We're testing new lows. Hopefully they are coming down. But we did see that dip to 3.843, and when we saw that, we had rates in the high 6%. So we had rates in high sixes, 675, 699, kind of depending on what your qualifications were. Now, to put it in perspective, we are back into the low sevens. So most people are getting in 7.125, 7.25, somewhere in there in the low sevens. But that little rise and fall, and all these numbers that I'm using for these estimated interest rates, just so everyone kind of has a benchmark here, this is an estimate of somebody who's buying a $250,000 home, putting 5% down. So we're not trying to advertise these crazy interest rates with 25 and 30% down. This is someone who's buying $250, they're putting 5% down, and they've got 780 credit.
Yeah. So, I mean, the other thing that we wanted to talk about with the market too is kind of what we're seeing with offers and things like that out there. So, I know it's not been good news for some of the agents I've talked to when they've asked me, what are you seeing out there, or what have you seen with offers? But we've had, I have a client right now that has had an appraisal waiver in place and put in 3 offers well over asking and has not won out on any of those bids. And we're not talking crazy here. I know that she offered, I think the home was listed for $250 and she offered $280 with an appraisal waiver and didn't get it. That basically happened twice. There was another time she went $20K over and it didn't happen as well. So the market's getting more and more competitive. So being able to have the ability, first of all, to run AUS, the automated underwriting system, which is going to let us know whether we get an appraisal waiver or what do we get it at? Like if the client has the ability to put down 20, 25, 30%, do we get a waiver at any of those benchmarks? So it's good to know that before you put your offer in, because if you can get an appraisal waiver, now your offer turns into what it looks like an all cash offer. And that's something that we will do before clients make the offer. So we tell all of our agents that we work with, let us know when you're going to make an offer because we want to make the strongest one possible. But basically what I'm getting at is we're seeing a lot of things, that get accepted. They got to, especially if it's only been on the market for a few days, you got to have an appraisal or appraisal guarantee in there. The over asking war has started already. Yeah. We thought it might be coming in April or May, but it's kind of already here.
Yeah. Like Max said, March of 24 here, and we're already. I thought this was going to hold off till April, May, this whole springtime craze, but I don't know that I've had any offers from any pre-approved buyers that have gone in over the last couple of weeks that haven't either been over asking or had an appraisal waiver not an appraisal waiver, an appraisal guarantee. We're back to a super competitive market, and my estimate, it's the same thing that a lot of people are saying that realtors are preaching, and a lot of other people are saying, as soon as these rates do trickle back down a little bit, it's competitive now, but when rates are another 0.5% or another % lower and that affordability is back on the table, people aren't scared to pay a little bit more for the house because they can build it into their monthly payment. It's going to be even crazier in terms of competition. So if you are on the fence and you're thinking about getting in and you're thinking about buying a house, I'm not saying you need to drop what you're doing and do it now, but it would probably be a good time to get in, because I do think we're going to be seeing the bidding wars and the crazy competitive stuff that we were seeing, I'll say, during COVID and even over the last couple of years. I think it's coming back.
And that means prices are going to go up too. Prices are going to go up for homes. So yeah, I've had clients that have been pre-approved since September, October, and they're looking to buy over the winter. Maybe they're first-time home buyers. They don't have kids in school, things like that. And I've been telling them like, hey, you've got to find this before April. Otherwise, you might be sitting on the sidelines until next year as well. So yeah, getting people out there with those competitive offers is real important right now, and something that hopefully, but looks like it's going to just get harder and harder to happen. So yeah, having that cash available or being able to put more down to get the appraisal waivers is going to be kind of a big thing coming up here.
Yeah. Last thing we want to talk about Mortgage 101 class.
Yeah. So it's something that we introduced last week. Got a couple more lined up with a couple real estate offices in the area, but we've been kicking around the idea and finally got around to putting together a kind of Mortgage 101 class for beginning agents or even agents that want a refresher or they want to know more about mortgages. We have the ability to come into your office, meet for lunch. You can come here to our office and we can do a half-hour, 45-minute little tutorial, basically teaching the ins and outs of what goes into a mortgage, what goes into a pre-approval, and just give you more knowledge. I think it's super beneficial to agents that are just getting started. But even last week when I did it, I was pretty surprised. The veteran agent in the room told me took a lot away from it. So it's good to always be out there, obviously actively getting better. But that Mortgage 101 class is something that we can offer to anybody. So if you're interested, reach out to us, let us know. We can set up a date and time and a location to come, get your agents that work in your office better, get your teams better, get yourself better, whatever it is that you're looking for. I know, what were some of the things you thought were a big highlight for the class?
The whole class is great, so I don't want to highlight any part of it, but I just think it's a great tool realtors don't need to know every in and out, and even everybody doesn't need to know every nook and cranny of a mortgage. But the Mortgage 101 class will just give you the confidence and give you the knowledge that you need to at least feel comfortable with some basic mortgage questions. Get you some answers so you don't just stand there when people ask, I don't know. It'll give you some basic knowledge. It's not going to teach you everything, but that's okay. You don't have to know everything. That's what we're here for. That's why we want you to call us. But man, it just gives you enough to be dangerous, kind of like enough to get through whatever questions you have, field any questions you have at a listing appointment or a first-time buyer consultation. You'll know a little bit more, some generic products, some just simple things that'll kind of get you started in the right direction, and will really just help you guys be the expert. I mean, at the end of the day, you are realtors, you are the expert, you are the people who are meeting with the clients face to face constantly, and it should just give you a little bit more confidence. And obviously, the more confidence and the more that your clients understand that you know what you're talking about, obviously the more referrals and better stuff it's going to lead to for you.
Yeah, and I think the biggest thing that I think the agents took away from it, at least when we were explaining, and we did explain some of the differences between what we do and what your average lender is going to do, and that was the CD initial. That is something that's really huge that we've talked to agents about it, but again, I don't think they grasp fully what we mean by that. So we have the ability with the loans that we do here to get our CD out, the closing disclosure out at the conditionally approved level. So basically right when the loan gets started, it's one of the first things we do is send out that CD. Why is that important to real estate agents? Because as soon as the client signs that CD, there's a 3-day waiting period before you can close the loan. So we send it out early, get it out of the way, so when the loan becomes clear to close, we can then close it the very next day. Or I forget what loan it was last week, we can get the clear to close in the morning and close it in the afternoon.
Yes.
Because that needed to happen last week. So we were able to make that happen. But that 3-day waiting period, and our lender talks about it all the time. Why do we speed up to slow down? So we rush, get that clear to close, and then sit back and say, oh, we finally got the clear to close. Now let's have them sign the CD. Now let's wait 5 days before we actually close the thing. Yeah. So this allows us to eliminate that, which again just makes our process more speedy and more efficient.
Yeah, I know every single realtor out there has had a situation where they get that phone call from a lender and the lender says, hey, we're clear to close. And they say, awesome, when can we close? And then they say, well, we're going to have to close next week because we don't have the CD signed. We've got to wait. We've got to go through it. So you're clear to close, but you're not really clear to close. With Mitten Mortgage Lending, when you work with us, when you're clear to close, you're clear to close. We sent your CD out probably on day one when we got your conditional approval. Your client signed it on day one. Maybe they didn't sign it that night, but they signed it the next morning. They signed it on day two, which means on day 4 or 5 of this mortgage process, that is done. One of the biggest, hardest things to get past is over with. Now it's a matter of us clearing conditions, getting insurance, getting the appraisal, doing the mortgage stuff, and then like Max said, when it's done, it's done. We're in an industry with deadlines. There are deadlines on these contracts. Max said we had one last week. It was a very short deadline, but we were able to get the offer accepted because we put such a short closing deadline on it. And we did. We got the clear to close in the morning, and we got docs set up, got everything done, and that client closed on their home that afternoon. We didn't wait 3 days. We didn't have to go through any of it. We were done.
Yeah, and I just had one come through the clear to close today. We put in an offer, agent put it in, said, hey, I'm going to put 14 days that we can get this done. Do you think you can get it done by the end of the month? I said, I love a challenge. So 14 days will be on Thursday. So we're getting the clear to close today. So yeah, we got it done in 10 days for them. But that was one of the deciding factors on them getting their offer accepted or them not getting accepted. So early CD is part of that quick process that we have. But again, getting back to the Mortgage 101 class, which is what we're calling it. Again, if you want info or you want to set up a time for us to meet, we can definitely do that. But there's knowledge obviously on the CD like we talked about. We also gave knowledge on the instant funding availability, rates, income and assets, some options that we have there for people to get them in the right loan program and to get them working on the pre-approval. So the Mortgage 101 class, reach out. It's going to be a really good tool for either you, your team, or the agents in your office. So anything else to add for this month?
I think that's it. That's all I've got.
Cool. Appreciate it. Hope you guys follow us on social media, like us, subscribe, all that good stuff, and we'll see you guys next time.